Welcome back with me, Peter Sparreboom, to listen to Module 6 of the UNCDF and IDEP course on inclusive digital transformation. We've concluded our review of the foundation pillars of the digital economy. This is the first of two modules that speaks about what can be built on those foundation pillars of the digital economy. This week we are talking about digital services, and we will look specifically into how emerging technologies are used in digital services. The development and use of digital products and services is a powerful catalyst for growth, and emerging technologies create new opportunities for developing such products and services. Platforms have been key in spurring innovation in this area, improving efficiency and inclusion. In this module, we look at how they work. Use cases for digital technology have been found by stakeholders in a wide range of sectors, including industry, energy, health, and education. In this module, we focus on digital services in three critical sectors: financial services, trade, and agriculture. You can find a number of definitions in the course material that you're required to read. I'll give a few here. Digital finance, DFS, refers to delivering financial services such as savings, credit, insurance, payments, and transfers via digital channels such as the internet, mobile wallets, ATMs, point-of-sale devices, etc. Digital trade, or e-commerce, refers to taking and placing orders for goods and services via digital channels. And digital agriculture, often referred to as AgTech, refers to using digital technology to deliver agricultural information, products, and services. So what is the state of digital services and emerging technologies in Africa? The first example that we will be talking about is digital financial services, which are financial services that are accessed and delivered via a digital device. So far, mobile network operators, independent agent network managers, and remittance providers have been the main providers of digital payment services in Africa, whereas many banks, microfinance institutions, and insurance companies have partnered with mobile network operators to provide digital credit, savings, and insurance services. Fintechs play an increasingly important role in developing and testing more efficient, user-friendly, and affordable digital financial services, and have been pioneering the application of emerging technologies to finance. Soon, though, global technology firms, social media, and e-commerce companies will become serious competitors in Africa. Over the past 15 years, the three most popular business models in Africa have been mobile money, agent banking, and mobile banking. Africa has been a global pioneer in mobile money, and today 49% of the world's active mobile money accounts are in Africa. In sub-Saharan Africa, the proportion of individuals with a mobile money account nearly doubled between 2014 and 2017 to 21%, while bank account ownership increased by only 4%. What is important to realize, though, is that only 39% of mobile money accounts in sub-Saharan Africa and 37% in North Africa and the Middle East are active, meaning have seen one or more transactions in the past 3 months. Mobile money and agent banking have contributed significantly to the formal financial inclusion of people living in remote areas. Challenges remain in the area of e-money licensing, exclusivity of agents, and taxes on digital financial services. Besides, low population density makes it difficult to make agent outlets viable, and low financial literacy limits the benefits of digital financial services. The second example we'll be talking about is digital trade or e-commerce, which is the sale or purchase of goods or services conducted over computer and mobile networks by methods specifically designed for the purpose of receiving or placing orders. E-commerce platforms offer two crucial benefits to their users, be they buyers or suppliers. They reduce search costs by facilitating matchmaking in one place at one time, and they save on shared costs for both buyers and sellers by providing an infrastructure for transactions. Emerging technologies such as artificial intelligence can be used to improve efficiency and service quality. A number of global digital platforms with strong market positions offer opportunities for African SMEs to sell their products and services both locally and internationally. In practice, though, many SMEs find it difficult to use these global platforms to sell their products and services outside Africa. Fortunately, innovative entrepreneurs, more keenly aware of the challenges for African SMEs, are starting to come up with solutions for these difficulties. On the demand side of e-commerce, the only countries in Africa where the percentage of the population that shops online exceeded 8% in 2017-2018 were Kenya, Libya, Mauritius, Morocco, Namibia, and South Africa. On the supply side, most Africa-focused companies that offer e-commerce services operate only within national borders. The majority of goods are still sourced from multinationals. Very little domestic e-commerce is business to business, and e-commerce is largely limited to higher value items. These are all challenges in the area of e-commerce. Digital trade has the potential to contribute significantly to economic growth and inclusion in Africa, in particular by helping to include SMEs into local and international supply chains and markets. Remaining challenges include tariff and non-tariff barriers to trade, different business regulation in different countries, lack of funding, logistical problems, a lack of experience with e-commerce among both SMEs and potential clients, and a lack of access to and trust in online payment systems. Our third example is digital agriculture, also called AgTech. It refers to the delivery of products and services for agriculture via digital channels. Most AgTech solutions are offered by non-governmental organizations, social enterprises, commercial ventures, and government agencies directly to smallholder farmers or other stakeholders in the value chain. The most common solutions, as can be seen in the picture here, offer advisory and information services, market linkages, supply chain management, financial access, and macro agricultural intelligence. On the supply side, as of 2019, there were at least 390 distinct active AgTech solutions across the African continent. On the demand side, AgTech Solutions had registered over 33 million smallholder farmers and pastoralists, mostly in East Africa, with uptake relatively high among youth and low among women. Yet, less than half of farmers and pastoralists used the solutions they registered for. Big tech and big agri companies are starting to change the sector's scale and scope. AgTech has the potential to contribute significantly to economic growth and inclusion in Africa. However, most AgTech providers are still working to develop a viable business model, and investments remain small. Most has gone to specific enterprises, and far less investment has been made in AgTech infrastructure. Other challenges include fragmented agricultural policy and regulation, a shortage of agricultural infrastructure and data, and limited provider and user readiness, for example, low digital literacy. So, how to increase the development and usage of digital services and emerging technologies? Governments have a number of tools at their disposal to support the development and usage of digital services and emerging technologies. General measures include those that support the foundation pillars of a digital economy, including a generally enabling environment, infrastructure, innovation, and skills. They also include measures that ensure healthy competition, such as regulation that enforces digital interoperability and regulation that enforces the sharing of digital channels. Besides general measures, each sector requires strategies, policies, laws, and regulations that address sector-specific challenges. For example, a digital financial services strategy would include investment in digital ID infrastructure and in financial education. Another example is digital trade strategy or e-commerce strategy. This would include investment in cross-border road connections, in e-government and the creation of single markets. And a digital agriculture strategy would include investment in public data, public awareness, and regulatory innovation to attract investment. Opportunities in Africa are expanding through several regional and global initiatives to standardize communication protocols, share channels, and create greater interoperability. Examples of this include the Central Bank of West African States Interoperable Digital Payment Platform, or Kenya-based Africa's Talking. It has an 11-country application development platform. Or China's Electronic World Trade Platform for public-private cooperation on improving the environment for electronic trade. E-commerce has also been included in the African Continental Free Trade Area negotiations. That concludes Module 6 on digital services and emerging technologies.